Distinguished guests, ladies and gentlemen, it gives me great pleasure to welcome you to the 2014 Bermuda Reinsurance Conference. My name is Arthur Whiteman, and I am the Territory Leader and Insurance Partner for PwC Bermuda, and I also lead our insurance offering across the PwC network firms operating in the Caribbean region. We at PwC are deeply grateful for the continuing support of our friends at Standard & Poor's who have worked with us to ensure that this event is an important thought leadership event for the reinsurance industry. Now in its 9th year, we've entitled today's event Charting a Strategic Course in Unsettled Waters. Before I make some brief remarks, I'll also introduce today's distinguished guest speaker. Let me first introduce Bernard de Longuevier, who is a Managing Director and Lead Analytical Manager of Financial Institutions Ratings at Standard & Poor's. Bernard's going to say a few words.
Thanks, Arthur, for your kind words. I wanted also to thank PwC for their sponsoring of this event. It's been now 9 years that this has brought us together. Yes, I wanted to introduce myself. In fact, I'm heading financial services, the financial services practice for Standard & Poor's for North America. I was until 6 months ago the head of financial institutions, i.e. banks, and now we merged the two practices. I wanted also to thank the participants and attendees to make this event a success. Over the years, many of the ideas floated here, initiated here, were further debated during the whole year. So really, I'm looking forward to hear the content of the panel, to engage in a dialogue with you, especially in these times when we think about the industry. Traditional reinsurers are still dominant, but again, questions have been raised about their long-term relevance. We have plenty of new entrants, influx of new capital, which are impacting industry dynamics. ILS transactions, technology could be disruptive, and so when we look at this environment, we see that the industry is facing it from a position of strength, from a lot of capital, strong ERM practice, conservative portfolio management. But again, and we have stable outlooks, by the way, on most players, but at the same time, we have a negative trend on the industry. And we feel that more than ever in these difficult times or complex times, setting up, having a very clear strategic vision about where you want to go and the capacity to implement it will be key to differentiate losers and winners. So again, I'm really interested to hear today what will happen, but at this stage, I'll give back the floor to Arthur. Thank you.
And just to continue those thoughts, the forces driving change in our market have really continued to intensify since we met last year. These forces are both structural and cyclical and are driving the market towards a point, some may argue, of fundamental dislocation. Low interest rates, low growth, and abundance of capital, customers who are demanding even more specialized, creative, and finely targeted solutions, brokers placing business towards narrower panels of reinsurers with the highest rating or greatest expertise. These and many more represent the challenges facing CEOs today. CEOs who must find the answers to the questions, what are we in business to do? What is our distinctive proposition? Where are we going to compete? And what will the resulting operating model look like? In spite of the complexity, there is no shortage of fierce competition which will leverage the disruption to create competitive advantage. So what does represent a viable solution in today's market? Is it to have superior scale, to be big and knowledgeable on either a global or regional level? What about the need to be nimble, though, to innovate using analytics and specialist expertise to punch above one's weight? Is it a float accumulation game to deliver superior investment returns? Or to focus on transforming risk for the broader capital and investor markets? Or is it to get closer to risk partnerships and to reconfigure the distribution channels? The reality of today is that hunkering down in the hope of a more favorable rating environment ahead is no longer a viable strategy for survival. Arguably, it never was. Even with lower costs and some uplift in premium rates, many reinsurers will struggle to sustain investment and competitive relevance. The ability to establish a value proposition that is differentiated, source new markets where pricing is at a premium, and innovate outside the commoditized corners will truly set a course for long-term success. There is no one model for the future. Indeed, it is this differentiation and ability to play to your particular strengths that will be crucial. And now it gives me enormous pleasure to introduce our guest speaker this morning. Stephen Catlin began his insurance career in 1973, joining B.L. Evans and others on Syndicate 264 at Lloyd's. He founded Catlin Underwriting Agencies Limited in 1984 and was the active underwriter of Syndicate 1003 and later Syndicate 2003 until May 2003. From September 96 to January 2002, he was the Lloyd's nominated director of Equitas Holdings Limited and served as chairman of the Lloyd's Market Association, the trade association representing the interests of Lloyd's underwriters and underwriting agents. From May 2000 until January 2003. He was a member of the Council of Lloyd's from 2002 to 2004 and a member of the Lloyd's Franchise Board from January 2003 until December 2006. Ladies and gentlemen, please give a very warm welcome to Stephen Catlin.
Good morning, ladies and gentlemen. Firstly, thank you for asking me to speak. Secondly, congratulations to Arthur, who's become the leader of PwC even, in Bermuda. I've been asked to give just a few words of introduction to your day today. I've been asked to talk about the market today as I see it, major threats, and indeed significant opportunities. So let's start with the market today. I do believe personally that some of the fear that has been propagated is unfounded. Yes, prices are coming off in most areas. But when I look at the rate indexes from 1999 through to today, let me tell you something, pricing is a lot higher today than it has been historically. And I think there is a danger of us speaking the market down when we should be trying to speak the market to be stable. I read one insurance broker saying, the reinsurance market is the worst in a generation. Well, I can only believe he's 4 years old. I saw another broker say that reinsurance prices are off 25%. Now, that may be true, but it needs to be put into context. If you look at the traditional risk transfer market, the pricing is not down 25%. It's down nearly half that. I noticed in Monte Carlo last year, there was a lot of fear, extreme talk, in my view, about the reinsurance market is going through a structural change, it'll never be the same again, blah, 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 blah. This year in Monte Carlo, I heard a lot more talk about the value of relationship. I don't see alternative capital as a threat. I see it as an opportunity. It offers a different product. It's a commodity as opposed to what the traditional transfer market offers. And the talk in Monte Carlo this year was about the relationship and the importance of relationship and the fact that the traditional product is different to the commodity product. There are, I think, now 6 policies out there where the trigger is in dispute. So if you're going to buy a commodity, make certain you define it very succinctly. In terms of threats, when I think about threat, I think about ultimate downside risk to capital. What is it that could happen that could clean out my balance sheet? And I think there are 2 types of threats which are difficult for every insurer. One is cyber risk, and the other one is pandemic. Now, I don't think the pandemic issue is perhaps as bad from the current virus as we first thought, but it does highlight the risk of a worldwide epidemic. In terms of cyber risk, if you think about what happened in 9/11, which was dreadful, but was narrow and focused, think about a terrorist attack on the internet. It's the only risk I can think of where the entire world can be hit with the same loss at the same time. It hasn't happened. It may never happen. But we know that people are trying to, there are criminals out there, terrorists out there, trying to cause damage. So I see that as a threat to the industry, but at the same time, I see it as an opportunity. It's an opportunity to give cover to our clients, provided that we can cope with the systemic nature of that risk. So there's no good us sending a product to our client which we can't honor. So as an industry, in my view, we have to find ways of giving real cover to individual businesses in terms of their cyber exposure, recognizing that we can't cover a global disaster in the same way as we can't cover a nuclear disaster, which is commonly accepted and has been in the industry for a long time. I think actually, strangely, and you may not agree with me on this, actually one of the opportunities for us going forward is process. This industry is absolutely Luddite in terms of its process. And it hasn't moved forward much in the 40 years or so I've been involved in the industry. I think there's going to be the winners and losers, insurance, reinsurance, underwriter, broker, are going to be those companies that can actually deal with and address process and do B2B. I think the chances of market solutions are remote. That therefore means that we as individual carriers, individual brokers, have to work out how we can process seamlessly, more efficiently. And there's real margin there in doing that. I think the other opportunity we have is to work through how distribution is going to be in the future. It's going to change. You've seen in London 2 independent brokers, wholesale brokers, coming together. 2 lots of them doing the same thing. The role of the wholesale broker is going to change. The role of the agent will change. The role of the retail broker will change. We need to understand that, react to it, and create relationship. And I'll leave you with two thoughts, if I may. One, we are very fortunate in that what we do adds social value. Pretty much everything we do adds social value. That's different from a bank. And we should be proud of that, and we should talk about it. And the second point I want to leave with you is relationship counts. It's important. It's the foundation of our industry, and long may that live in the future. Thank you for listening to me. I hope you enjoy your conference, and I hope it gives you some food for thought. Thank you.